Hello traders, welcome back to my channel. The major is right here to educate you guys, to give you guys something very important. Yeah, I know to analyze the market is it's a big deal. Yes, a lot of people find it is very difficult to analyze the market properly. Okay, so I've decided to give you guys something that you have to apply, all right, implement into your trading system to have more winning trades. Okay, so if you stay close, watch this video to the end, you'll be able to know how to do this thing yourself. All right, key levels, key levels. To identify key levels on your charts makes the work easy. If you can identify the key levels on your charts, key levels are just like zones, the support and resistance zones that you've been talking about, demand and supply. But in this video, I'll show you a different way or approach to identifying those zones. All right, so smash the like button, subscribe to this channel, and make sure you watch to the end to be able to do this thing by yourself. All right, and also check the description box to click on the link to join the free Telegram channel. I have some setups I'll be dropping there every day. All right, so let's move in. Okay, so in this video, like I said, I'm showing you guys how to identify key levels. Key levels. Why are they called key levels? Key levels are those levels that market find it difficult to break. Once market drops into that key levels or move into the key level, it reverses. All right, or even if it does not reverse, it will pause for a while before the final move. Okay, so what does that mean? It gives you that time, the leverage for it to either make money or uh, analyze your trade again to now know that, okay, this trade is not right. I think I should opt out. Okay. And also give you a good level for your stop loss and also tell you, okay, this is your target because this is a key swing zone. Do you understand? So key levels are really important as a trader. You can't do without key levels. Key levels, just like I said, is demand and supply, support and resistance. But if you don't know how to identify them, you'll be in a very hot soup. All right, let's move in. Key levels. How do you identify key levels on your charts? First of all, I love going to my daily time frame. Thanks guys for the love, the videos, watching my videos and subscribing and a whole lot of stuff. I really appreciate. I'm back fully and a whole lot of stuff will be happening. Okay, I'm back fully, guys. Now, key levels. You must first of all move to your higher time frame to identify your key levels. If you don't move to your higher time frame, it's hard for you to identify your key levels. So how to identify those key levels? I have two approaches where I use the first and the second approach, and I'll show you guys the first and the second approach in this video if you watch it to the end. Okay, so the first approach will be using the candlestick to identify my key levels, but I must start from the daily. If I'm doing synthetic indices, if I'm doing the currency, I can start from the weekly, but most times I love starting from the daily because I'm a day trader. I don't want to stress myself, but sometimes I go down to my weekly. Maybe on Mondays I go down to my weekly to know what happened the previous week. That is, how did the candlestick close the previous week? But for synthetic indices, since I mostly make use of the um, trading view, all right, it does not have the weekly, though I've seen a link that has the weekly, but this one does not have the weekly. So I use this trading view for my analysis and it does not have weekly. So I start from my daily time frame down to my 15 minutes time frame. I normally do my top down analysis. So in this video, I'll show you guys how to do that real fast. Now, first of all, on my daily time frame, I want to zoom in properly, zoom in properly, zoom in properly to know what is happening. Now, first of all, when you want to analyze, you need to understand around your around your well, what's going on there? Oh, okay. So, on your daily time frame, this is your recent markets, okay? Your interest should be somewhere around this area, okay? You don't go far from this area. First of all, you want to understand where is this market coming from and where is it going to and what is happening in the market. And you can only know this if you're familiar with the markets, with the price action, how the market moves. Okay. So right now I want to understand where is the market coming from and where is it going to. Now take a look at this. There's a break of this level. This level got broken. Okay. This level got broken. So that means we have market has given us um, a higher high. All right. So we are actually in an uptrend because there's a break of this level, the structure. So we are in an uptrend. All right. So now, how did the yesterday candlestick close? Very important. Yesterday the candlestick dropped down to this point and then rejected and closed above. Why did the yesterday candlestick reject and close above? Look at this place. This is a zone. This is a key level. Look at that. This candlestick dropped into this point and closed above. So now I understand that market rejected coming below downward and it will be going up. So my interest would be looking for buying opportunities. Do you understand? Because of this long rejection. Okay, because of this massive rejection. So you see, it's now easy for me to know what is likely going to happen today in this market. Is likely going upward. Okay, it's likely going upward because of this rejection, because of this break of this structure, and might giving us a new higher high, swing high. Okay, so markets will be going up. We just need to wait for a bit of pullback, a bit of pullback, and then we enter long positions. Okay, so now how do I identify my key levels with using candlestick? To identify key levels using candlestick, first of all, we have what we call unfresh zones. We have unfresh zones. We have unfresh zones. All right. Unfresh zones are zones on the chart where market has not traded into. Market has not traded into. All right. Market has not traded into. So something like this, we have a demand, a supply right there. Market comes into this point and give us a demand, supply here and a demand right here. So you can see this level, market did not move up into this point. All right. Market did not buy to this level. No candlestick formed above this level, not even the week. All right. And this level also, there's nothing trading, there's no candlesticks below this zone. There's no candlestick below these zones. So if you have something like this, you have candlestick, even if it's the week below this level, that means it's no longer fresh. This level, this place here is no longer fresh as long as market has gotten to this point. All right. And if market goes above this level, that means here is no longer a fresh zone. This is now on fresh zone. All right. So once market do something like this level is no longer fresh, it's now on fresh zone because we have market trading above this level. And market comes below this level is no longer a fresh zones because we have market traded below this level. So where is our fresh zone now? This level, this is our fresh zone, and here, this level here is our fresh zone. All right. So let me show you on the charts. I want to make it really fast, guys. Let me show you on the charts. Now, when this level was not traded above, when market did not go above this level, this was a fresh zone. This was a fresh zone, but since market traded above this level, this is no longer a fresh zone. This is now on fresh. This zone is now on fresh. This zone is now on fresh. The same thing here. When market did not trade above this, which is this structure, when market did not trade above this level, this was a fresh zone. Now market has traded above it, is now on fresh zone. But this is here our fresh zone. There is a fresh zone right here. Why? Because we don't have any markets trading below or traded below. All right, market did not come below this level, so this zone is still very fresh. It's untapped. Okay, very fresh. Okay, very fresh. So until market comes down and then poof goes up, that's when this level is no longer fresh. All right. So now, which one is more reliable? The two are really functional, like very important. You need to acknowledge both the fresh and unfresh zones. All right. Well, I think the fresh zone, the actual fresh zone is more reliable. It's more, more reliable. It's more effective than the unfresh. But you must acknowledge them. Okay, you must acknowledge them when you're placing your SL, your TP, and when you doing your analysis, you need to acknowledge them and make sure that you don't play with them. You don't just ignore them. Okay, so they equally play a role. I'll show you why they are important in this video. All right, so now we now understand what fresh and unfresh. You don't understand, you join the class. We have a mentorship platform where you can learn how to do all this stuff yourself. All right, so now we now understand what is fresh and unfresh. Okay, so now how do we identify these zones using candlestick? When you see a candlestick like this, you have a bullish candlestick from to that point, and then you have a bearish candlestick right there opening the same range, and then form below. It could be something like this, or it can actually come below this. The previous one is still the same thing. All right, so here is the bearish candlestick. I'll turn it to black. So here's the bearish candlestick and here's the bullish candlestick. All right, once market does something like this and it keeps going down, all right, once it closes like this on the daily time frame, that makes this level above this level automatically a zone. This is a key level on the chart. This is a key level on your chart. All right, once you have a bullish candlestick close like this and a bearish candlestick opens and close below the opening price, here is a zone. If it closes above the opening price, then that's not a zone. All right, but it closes below the opening price, that is a zone. This level here is a zone. So bring my horizontal ray and place it right there on the closing price, not on the opening price. All right, on the closing price, which is the bullish candlestick, because it closes above while the bearish closes below. I place it on the bullish closing price. All right, now that is my zone. Now let's go into the real chart. This level here, we have the bullish candlestick closing like this, and we have a bearish candlestick. Even though the bearish candlestick closed really tiny like this, all right, above here is still my zone. This level here, it's my zone. And then I place it on the closing price, the bullish closing price, not the bearish closing price. All right, I'll show you my reason right now. Let me show you, especially those that are trading currency, because you can equally trade this strategy with currency pairs, gold, crypto, anything at all. All right, let me show you why you need to always put it on the closing price, not the opening price. Okay, so this is currency. This is our currency, and this is GBP USD. Now, I want to show you guys why you should always place it on the. Sorry, I was teaching my students, and that's why we're having this stuff here. A one-on-one session yesterday with my students. Okay, so now, why should you always place your line on the closing price, not the opening price? Look at this one here. You can see the bullish candlestick closed like this, and then the bearish candlestick closed above, not at the same range, not in the same range with the bullish candlestick. All right, so now it will be confusing for you to, you'll be looking for a way to place. Some people place it right here. Some people place it right here. If you place it right here, this is not the zone, because if I switch to line charts, poof, you don't have anything there. There's nothing right there. You're placing on the sky, like in the air. The English is correct. I hope so. Yeah. Okay. So, but if you place it on the closing price, which is here, you see that if you switch it back to line chart, you have something right there. You actually place your horizontal line on there on a structure, which is a key level. All right, on a key level, bro. So that is why you should always target the closing price, not the opening price. Let's check it. Let's do that again. Let's look at this again. Look at this one here. Now you see this is the closing price for the bearish candlestick. Here is the closing price, and see where the market drops below the you know, the bearish bullish candlestick closed below. I mean, open below. Why? Because this is currency, and every day the market opens and the spread get wider, and you know, when it opens, it jumps from the previous actual price, the previous price, to, you know, somewhere below or above, depending on the spread. So that's why you have something like this. So today, on this very day, the market jumped below the opening, the closing price. So if you want to place this line on the opening price and you switch to line chart, you don't place the line on anything. But if you place it on the closing price, then you switch to line chart, you actually place your zone, I mean your line, on a key level. All right, so that's it. All right, let's go back to the synthetic indices. You know, I love trading synthetic indices because I don't have the strength for all those stuff, but I trade currency equally. Just that I'm more active with synthetic indices. But whatever I'm showing you today now, you can equally use it to trade currency and synthetic indices, even crypto. Okay, so now you understand what I'm saying there. Then the same thing again when you see a bearish candlestick into the demand or into the support zone, and then there's a bullish candlestick printed after, and the bullish candlestick actually closed above the open below and close above. All right, so here's our bullish candlestick. So that means this place is automatically my support. That's my key level. So the market keeps going up. Market keeps going up. Okay, keeps going up. So at some point, market started coming down. Market started coming down. This is my bearish candlestick. The market started coming down. Market started coming down. All right, I wait patiently for the market to keep coming down. Those are the candlesticks into this level, and you see the wonders, you see the magic that's gonna happen right there. The market will just poof and push up, because that's a key level on the chart. That's the key level on my chart. So if you use this approach, it's easy for you to identify support and resistance, to know those key levels. You don't just put your tools randomly at every place you see. It's confusing. All right, sometimes it's really confusing, but with this approach, you'll be able to identify those key levels properly. It's very important to know how to identify these key levels. Once you know how to identify these key levels, it's easy for you to know how to trade, to do your analysis. So now again, once market drop into the key levels, it's hard for market to break that key level. Yes, it's very hard for market to break the key levels. All right, so here you see it on the main chart. We have the bearish candlestick and we have the bullish candlestick close above. That makes this level a key level. The same thing I just showed you guys here. This is a key level right here. The bearish candlestick and the bullish candlestick close above. That makes this low a key level. The same thing here. That makes this low a key level, and this makes this low a key level. It's that simple. I know you understood that. So that's how I teach. It's very simple. So now I'll delete everything out and show you the second approach, which is using the line chart. Okay. Now let's switch to line charts. You can see how simple it is. With this line chart, I can see a zone right here. You can see a zone here. And you see this zone and this zone aligns because this is a key level. You can see what happened. Market drops, push into this level. There was a key level here. The market drops below. There was a break of this structure, right? The break of this structure and even the second structure. All right. Then there was a pullback into this level before the massive drop. All right. So we're actually descending. They break out and they break out, then they pull back to this level. And you see the accuracy just at this very price, the market started dropping all the way down. So that's the beauty of key level. All right. So again, if we switch down to back to candlestick, look at that. This is our candlestick chart. You can see the same thing I showed you. Once you have a bullish candlestick closing and a bearish candlestick close below, that is a key level. Then you bring your horizontal, horizontal ray, the line, to place it on the closing price. It gives you the actual market structure. Okay, you place it on the actual market structure. Then the same thing, you can see how it aligns. Now, again, in the future, this is why the yesterday candlestick rejected, because it dropped into these key levels, all right, and rejected. Now, I told you earlier that I'll give you a reason why you should always acknowledge the unfresh zones. This zone is unfresh because we have market traded above it. This zone is unfresh because we have market traded above it. But what happened? Market dropped yesterday into this level and there was a reversal. And I made so much money from this trade alone. You can see the accuracy just dropped into this point and there was a massive rejection. Let's see on the 1 hour time frame what happened here. So please smash the like button, subscribe, guys. Look at this. You see? Market dropped into this point. This is where I started buying from. This is where I started buying from. And my target was right there. My SL was below the tail of that candlestick. And we smashed TP 1:4, 1:3. I think it was 1:4, something like this. Yeah, it was 1:4 RR. So we made so much profit from these markets. Blessed. So you see, that's how to do it. Now, if I did not acknowledge the unfresh zones, I wouldn't have gotten this setup. I made money from this setup because of this. All right. Now, that's the beauty. You see how simple it is for you to know key levels? It's only here that I can teach you this simple and you understand. All right. So it's not about doing influencing job online, showing cars and stuff. It's about actually giving the actual value. Okay, giving the actual value. So you can see now. I know you can do this yourself by yourself. So that's the key level. That's the key level, and we've identified key level. Market is doing perfectly well. So I can show you another trade I took yesterday. What's another trade I took yesterday using key level? Using key levels. Which trade did I give to my people yesterday? Was that 10-1 ace? I think it was 10-1 ace. Let me see. Let me check. Okay, 25-1 ace. That was fast. 25-1 ace. It was really fast yesterday. We made 1:2. You see, 1:3, 1:4, 25, VIX 25-1 ace. VIX 25-1 ace. We sold it. We short it, guys. We short it, guys. Now, the same thing I did there is simple, pretty simple, guys. Pretty simple, guys. Your mentor does not know this. You might pay them 10,000 and they will not tell you. They don't know. They don't know. Now, look at this. This is a key level because market closed, market open, market closed here, and another one open right there. So here's a key level. Here's a key level on the chart. If I switch to line charts, you see that. You can see here's a key level on the chart. Now, market went below. Remember, when a support got broken, what's going on? Okay, when a support got broken, all right, here's the support got broken to come down, and there will be a pullback to that level to confirm it a resistance. Support broken turns to a resistance in the future, all right? So you can see this level got broken, turns to resistance. In the future, this one got broken, turns to resistance. It was a support before, got broken, turns to resistance. The same thing here. That's the same thing that happened here. I saw therefore yesterday, there was a breakout down below. Then I know that markets will be pulling back to retest this level to confirm it's a resistance before the final drop. So I saw this breakout. I know that this is a zone, and it's not just a zone, it's my own fresh zone. Okay, but I acknowledge it. Then I placed my line right there and waited for market to get back to that point. Let's see what happened on the 1 hour chart. What happened? Poof. Market gets back to this. There was breakout. Market gets back to this point, but we could not catch it here. This is where we catch it when market gave us, series of lows. All right, lower high. So I waited for market to give us a lower high, which was where I shot it from. I sold it from this level. I sold it after this 15 minutes down candlestick confirmation. Yeah, actually after this very candlestick confirmation, this very one here, so slowly did a little pullback, and then there was a massive drop. I will smash our TP somewhere here. Just 1:4, 1:5, right? Let me see. My SA was just above that level, and our target was somewhere here. Yeah, 1:4. Market just smashed our target and started reversing. Then it started, consolidating before the final drop. Okay, you can see that with the help of this key level. So if you can identify key levels on your chart, you are good. You're good. All right, you're good. Apply those two method, and you see how easy it is to identify those key levels. I think I've been able to, educate you guys on this very part, like how to identify key levels. So if you find it difficult to still do this stuff after showing you here, you can chat me up, check the description area to chat me directly, and don't forget to join my free Telegram channel and join my mentorship. Join the VIP as well. Let's make money together. Learn how to analyze. 2026 is almost here. Everybody should know how to analyze the market. Do your analysis yourself. All right. Everybody should know how to analyze. All right. Do your analysis yourself. Make your money and chill. Okay. So I believe you are convinced that key levels are more reliable than other block. When you say other block, this and that, demand, key levels, to identify key levels is easier and better to trade. So in our next video, I'll tell you guys what we do after key levels. What do you do after your key level? What next? Okay, so that'll be all for now, guys. The image is right here. Bye bye.